there are no regrets in life, there are only learnings. Because whatever we do, when I just entered the stock market, I met a man who told me that either you don't trade and invest in the stock market, you don't regret. Because I think for a dogmatic person like me, I can only learn from mistakes. And I'm not afraid to make a mistake, because if I'm afraid to make mistakes, I'll never take decisions. But only I want to take one which I can afford, so I can live to make another one. I say hard work, integrity, God's blessings, lucky to have been born in India and come to the stock market when the Sensex was 150. Regret my personal habits. One thing I could change in life, it's my personal habits, and not from now, maybe from 20 years ago. And always the optimist, and always a risk taker. There's a buffet here. There are so many dishes. Eat what you want. Don't eat too much. Because in a period of 5 years, you always have rotations, right? And I don't advise anybody who's present here, except one who's a professional investor, to try and invest himself. The best medium is through mutual funds. If I get sick, I just take some crocin and go to sleep. But my mother and Rekha will call the doctor, because they see I need professional help. Similarly, investing is a complex procedure and complex methodology, and requires a lot of professional help and monitoring. So I think best reason is to use mutual funds. And I think the best way to invest in India is in SIPs. It may sound very boring, because India is basically in a bull run, the economy itself. So if you invest at all times, you'll invest at an average point. And I think this bull market in India and Indian stocks is going to continue for I don't know how many decades. And the basic reasoning is that because the economy will grow at 7-8%. And if we have, I feel in given time India's economy will grow at double digits. And we have 4-5%, 5% inflation. With 15% growth, nominal growth, I don't see how equity valuations, will not rise at 15 to 18%. Some years maybe 40, some years maybe negative. So I think you should invest over extended periods of time. I know it's very interesting to discuss stocks and talk stocks and say I bought this and my stock is doubler and my stock is trebler, but it may not be very profitable. It's important what we buy. I think it's more important what price we buy. In 1999, I bought 5% of United Spirits and United Breweries for 6 crores of rupees. Everybody, if I held those shares today, the value of that investment today would be 2,000 crores, right? And everybody told me, Vijay Mallya, you can't make any money, he's a thief, his companies are never on money. But, I thought you are getting 55% of India's liquor industry at a valuation of 100 crores. That means the entire liquor industry in India was being valued at 200 crores. So that was ridiculous, and I made money. I made at least 15 times my money in 3 years. So most important thing is, it's about what you buy, it's what valuation you buy. See, what I look at is, first I look at the size of the opportunity. See, I carry leverage, but I don't carry leverage beyond a point. So if for any reason I need to bring down my leverage, I might sell. Second is, if I have a better investment opportunity, I need capital, I might sell. I think these are the primary 2 reasons why I will sell an investment. Or if I feel that an investment is, horribly overvalued, and investments are like children, you don't feel like that easily, then only I sell. Well, markets always surprise, but they say it's fastest, before the climax. So I think the rise in January has produced some, not a permanent climax, not end of the bull market, but surely has produced some kind of climax to the whole rise from 7,800. We had a tremendous rise from 7,800 in the budget of 2016 to 11,300. So I think January was some kind of climax. Not a permanent one, not one which will not be broken, but certainly one which will halt and take time.
So, are you making a case that now markets could consolidate time-wise and we could see minor price-wise correction, and it could be for not days but quarters?
You're taking the words out of my mouth. I think markets will consolidate and need to consolidate to have a healthy further rise, right? And I don't see much of a fall, neither do I see much of a rise. I think markets will move in a narrow range, right? And see, we cannot forget one thing, that we have fairly high valuations in a time when markets are going to face uncertainty. And I think the primary uncertainty is the talk about the elections of 2018 and 19. And nobody knows what's going to happen ultimately. You may have the BJP coming back on its own with 300 seats. You may at the moment think BJP may get only 225 seats. It's all speculation. But what markets don't like is uncertainty. So all this kind of speculative talk has surely produced some uncertainty. Then we had this public sector scam, which has also brought some amount of nervousness. Internationally also we face uncertainty from the interest rates and inflation. And the reversal, maybe American central bank policy, what QE is reversed. We don't know about Europe and Japan, but surely people are speculating that will also reverse. So I think in the face of this uncertainty and the kind of valuations that we have, for market to easily and break the previous high in a very short term without time passing is, in my opinion, difficult.
You've always maintained that bull markets, they peak out when there is a valuation froth and where there's a participation froth. Valuations are not very expensive, they are expensive, and participation is not at a historic high.
Yeah, so technically markets not ready to go down. Despite markets don't go down because valuations are high. Markets will go down when there is extreme valuation, there is extreme participation, and there is bad news. Right? We don't have any bad news at the moment. The economy is on uptick, right? And see, valuations may look expensive today, but I think if we have the kind of earnings growth which the brokers are predicting, then they may not be so expensive. Only time will say. Also, also I feel that, the flow of equity by the Indians will moderate but will not stop. I think the Indian money, suppose it has reached about 20,000, 25,000 crores a month, it may come down to 12 to 15,000 crores a month, but it's not going to go below that. So we are going to have a flow of local money. So therefore I feel, and what's wrong? I had one of the largest gains in my portfolio in my life last year, right? And on a sizable portfolio, sizable gain, it needs to be absorbed, it needs to be digested. So as equity investors, we should not feel disturbed about a possible consolidation of a quarter or 2 or 3.
I'd like to draw your attention to what's happening in the world right now. US bond yields are moving higher. We have a fear of growth. 2 years ago, we were discussing negative interest rates in the world. Now, world is getting worried about inflation. So, how do you see the global dynamics are changing?
Well, see, it's a very big dilemmatic situation, Nikunj. That one fact is that the US bull market started in 1982-83. That is when US interest rates peaked at 17-18%, right? When Paul Volcker was the chairman of the Federal Reserve, and he raised interest rates to kill inflation, and he managed to kill inflation. And those interest rates of 17-18% came down to nearly nil, and now they have reversed, right? Now, I will say the interest rates are very important, but they are not the only factor in a bull market. But to my mind, another factor which has supported this long bull market of 35, 37 years is globalization, right? Because that brought deflation. China exported deflation to a lot of countries, especially America, and globalization helped economic growth all over the world. I think what Trump is doing is actually starting the reversal of globalization. Thirdly, I think technology played a big role because it produced efficiency. I think that's still very much around. So I don't know what to say about how markets will, fare in the next 5-6 years internationally. I'm no expert. But I think we should keep at the back of our mind that We had a 35, 40-year bull market from 35-year bull market from 1982. It started with the bottoming out of interest rates, right? And the peaking of that bottoming out is now over, right? Also, profits as a percentage of GDP are in the US are at the highest ever. But I don't think technically, if you tell me 3 months, 6 months, 9 months, 1 year, I feel seeing the screen and the attitude that the international markets, especially America, will go up rather than down.
The taxation structure which has changed, now that there's a 10% tax, could that have an impact on P multiples, because P multiples are a function of return?
It's difficult to comment. We have to pay what the government desires. And for me, I think a 10% rate of tax is reasonable. It's not something out of the world. And I don't think that flow of money to equity will stop because of that. But I thought the timing was wrong. Because I don't think there was so much of flow of money was coming. Sentiment was good. And I don't think government is going to realize even 5,000 crores or 3,000 crores of capital gains tax. Because I will have to first gain from the price as on January 31st. Then I will have to sell and then I will pay tax. So I thought I'm not against the imposition of this tax. But I thought it could have been delayed by a year or two.
2 years ago when we met, you said you think that it was foolish to write off Indian IT companies. Now, Indian IT sector are at least indicating for a brighter future. Do you think worst is behind IT sector? Are things opening up there?
See, I'm not so knowledgeable to say whether worst is behind for all time. But I think next year the performances will be much better. And what will also contribute is currency. Because last year they all had 2017-18 revenue in dollar term, in rupee terms is lower than dollar revenue, right? By about 2.5%, 3%. Next year I believe that rupee revenue will be 2.5%, 3% higher than dollar revenue. And I think that will give a 4 to 5% effect in profitability of IT companies. Plus I think growth next year is going to be better than 17-18. So I think they will perform well next year.
So the recent rise in IT to your mind is justified?
Well, I don't have any investments or any trades in IT companies. But I think they've done well. They will perform well in my opinion. I don't know, I could be wrong.